Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Tuesday, September 13th, 1:44 p.m. New York time. Good afternoon. Discussing options. Discussing advanced strategy trading options. This advanced strategy trading options is called vertical spreads. There's two different kinds of vertical spreads. Debit and credit. I'm going to show you credit. What's the difference? Well, one is when you do the debit, you don't collect the money right away. And there's a different sort of risk on there. We'll do that in other videos. But the credit, you collect the income. Just like insurance companies selling you insurance policy, you're paying for it. You're paying as a debitor, insurance policies receiving that as credit. Has a better probability of being successful doing the credit trades. Okay, well, I'm going to focus on particular industry sector. The sector is healthcare. The industry is biotechnology. So these are low price stocks. You can either outright buy the stock. If you buy the stock, the position is called long. You only have a 50% chance of making money. It has to move higher from the price you bought it from. 50% chance, correct? Yes. If you think the price is going to go lower, you have to short the stocks. Short the stock is called selling the stock, collecting the income. It's directional. 50% chance you're going to make money. Well, this option strategy, there's many option strategies. This one produces income. You decide how long you want to be in it for and the value you want to collect. There is margin requirement. Not all brokers offer options neither. So the charting I'm going to show you is on Thinkorswim, owned by TD Ameritrade, which is actually Charles Schwab now. The trading platform I'm going to use is Tastyworks because it's the best option trading platform on the app for phones as well as the desktop. So this one stock I have queued in here is Alpha Kilo Romeo Oscar. Yeah, I mentioned it to some people yesterday. Some people, because they were live. Well, we're looking here at 4 grids. The first one's 30 minutes. Second one from the left is daily. Third one from the left is weekly. The fourth one is monthly. We'll show that on all of them as I go through. Down here, the stock yesterday, the high was $12.73 down here. Now look at it. It gapped up today, made a high of $29.78. Excuse me. Now we're looking at the monthly. 5 years. Look at all this price action in one day. And the monthly. Super overextended. Do you think this is going to have continued follow through? Maybe it's overextended and maybe it's tired and want to take a break. That's my thought. Again, there's more to do than just that. I'm just trying to show the basic. Okay, let's look here on the trade. The stock, $27.63. It's moving. Bid and ask, level 1. This is level 1 data. All brokers provide that, even Robinhood. Level 1. Bid, $27.61. Ask, $26.68. It's moving pretty fast. Yeah, that's wide. That's really wide. Current volume 39. Let's go to the other trading platform. Tastyworks. Same thing, I have it queued in here. Looking at the contract, 16 September, expires in 3 days. October 21 expires 38 days. Let's just open up that one, the October 21st contract that expires 38 trading days or calendar days. Let's queue this up to, may not be a good example because the current strikes are not even represented. There's such a gap. Well, okay, let's still do this one. Let's still do this one. This strategy is if you're bearish, think it's overextended, it's not going to go much higher. We could do this one. Okay, again, it's 27. No, it's not good because the it's not been pricing in the new strike prices. Let me double check here. Okay, this one is, let me double check why I'm not getting it on here. Okay, well, it's this one right now. Here we go. So bearish, I think it's overextended. It may not go much higher between now and the expiration. Again, 38 trading days, 21 contract, 27. So how do you do this? If you're bearish, I'm going to show you both sides. If you're bearish, let's select a strike that's above. So 27 is the current strike. Here's the common strikes. Let's go higher. Let's go to the 30, 35 strike. Yep. Load this up. I'm going to show you how it's going to look as a bear call spread. This one just happens to be 5 strikes wide. It's only paying that. I don't like that. I want more. Let's get more aggressive. Go down. Go down to the 30 strike. 30 strike on the call side. Again, it says vertical. So what's going on here is I selected the contract 21 October. I selected the strike 30. So selling the 30 strike, selling the 30 at the bid and buying the 35 at the ask. See this right here on the left, vertical spread, selling the 30, buying 35. You're selling the lower price strike, buying the higher price strike. Not only is that a difference, watch here, the 30, you're selling at the bid, you're receiving 440, and you're buying there. So notice the one you're selling is less than that one, giving you a credit. See the word here, credit, 215. So if you take the difference, 450 and 500, you're getting a credit. If I want to lock that in, lock that in. And that's what you receive, $215. What you're looking for is the stock to stay below 30 between now and the expiration date, if you decide to stay into the whole time frame till it expires. Or as the prices decline, which you want to happen, doesn't have to happen, but as long as it plays below 30, but the faster this price here declines, goes lower, this will melt away like ice cream, so you're keeping more of the difference. So money management, maybe you close it at 25% gain, 30 or 50%. You decide. I recommend you start small. And because it's 5 points wide, that's a $500 margin you need. Yep, it's going to deduct $500, put it on the side of your account, and then you have a credit. So again, look at here, the charts. Look at this intraday. It's already selling down. Selling down. If you're bullish and you think it's going to go higher, well, where do you think it's going to go higher? Let's clear this out. And let's look at the low of the day. The low of the day is here. Yep. Open this. The low of the day, right here, it's going to say when I hover over it, $25.01. Good luck if you think it's going to stay there. $25.01. Go to the trade. Look down here now. Well, we know the low is 25, so I don't want to be even safer lower. Let's look at the 20. 20. I just wanted to say hypothetically stay above $20 between now and expiration. This is bullish if you're bullish. This is puts here. You're doing puts. So I'll be selling the 20 put. And I'm going to buy the 15, which is again 5. So I'm changing this to 15. 5 points wide. Look at the difference between 20 and 15, 5. And again, the 20 is the one I'm selling at the bid. See right here, it says selling 20 puts. and then you're buying by the 15 put. Yeah, they're the same expiration, 15. So again, 5 points wide. So selling the 20, 210, buying the 15 at the ask. The difference between that gives you 130. So you collect a credit. Just think you could do both sides I just showed you. Go on here. This is the 20. Here's the chart. Intraday, daily, well, 20. So you need to stay above here between now and the expiration. If you ever trade stocks, when they gap up, have you ever seen what happens? Think about it. Yeah, think about it. So what can make this go lower? Bad news, no new buyers at the top, the market maker making price action, no one's buying at the high, it needs to make some money, maybe reduce the price, might have failure. So again, you could trade this at both sides. Just think this was almost a penny stock several months ago. Let's look at another biotech. Again, these are one-hit wonders. Some of them don't survive. But again, instead of outright buying the stock, let's look at another one. Here we go. Alpha Lima Lima Oscar. This gap down today. Look at that daily chart gap down. Here's the low of the day. Well, this one, and look at here on the monthly. That was the bottom of the year. Last month was the high year. So maybe you think this is going to stay above the high and go sideways or higher. And you can research the company. I'm not more interested in the company, just showing you examples of some of these ones. Why? I'll show you that in a moment. But Alpha Lima Lima Oscar, let's get this out of here. Alpha Lima Lima Oscar, 1414. The last, look at the spread. The bid 1413, ask 1415. 2 penny wides. That's much better than the other one, right? Yes, it is. Look at the volume, real low. I'm just showing examples. So let's look at the options. 21 October, 38 trading days. Open it up. And maybe you're bullish. You think it's going to stay above that price I mentioned. So let's look at here again. Current price 1414. Let's go lower. It's not paying much. Well, yeah, let's do this one. 1250. So sell the 1250. Oops. $12.50, buy the $7.50. That's paying 40 cents. Again, hopefully I don't need to go over this again. Credit spread. You're selling the short strike and buying the long strike. Short strike is the one you're selling at the bid. Doesn't matter, either side. The calls on this side, puts on that side. The one you're always selling is the one at the bid. The one you're buying is at the ask. For this kind of strategy, yeah, so you're collecting $40. Yeah, it says 40 cents, but if you understand options, contracts are 100 shares times 40 cents, 40 bucks. Yep, collecting 40 bucks. You want to take more risk? Well, you got to move it up. Let's look at the other one. Just to give you a comparison. GFI. This is not a biotech. I just want to show you. Bid 8.10, ask 8.11. 1 penny wide. That's really good. Really good. And let's do this one more on the biotech stocks. Golf, Oscar, Sierra, Sierra. Look at this on the monthly. The daily is down. Yeah, it's down. So maybe you think that's at a key level. Let's cue this in on the trade. 1384. Well, that volume's terrible. But again, not surprised. 1384, bid 1383, ask 1385. That's not bad. 2 cents wide. Look at the option chain. I'd like to get one that's nearest 45 days or less, right there, 21 October, 38 trading days. And again, determine, are you bullish or bearish? Well, looking here on the weekly, I can see it's struggling up there. So maybe it's going to stay below $15. Maybe it's under distribution. Smart money may be selling. So I'm going to show you on the bearish side. Let's do that one. 15. Vertical. Take this 20. Yep. 5 points wide, short the 15, long the 20. 5 points wide, 500 margin. If you do 5 points wide, 500 margin. If you do 1 point wide, it's $100 margin. But look at here, 5 point wide, collect 75 bucks. 75 bucks. That's not bad. That's not bad. So again, this is how it works. You decide. I recommend you do some of these, paper trade, and when you do one, make sure you have written down what your exit plan is. But again, taking consideration of how wide the bid and ask is, what you're collecting versus the amount of margin. Again, just like buying stocks, futures, forex, crypto, you could be wrong in the direction. Have your exit plan. So this is just one of the many strategies, but this is one of the best strategies. But if it doesn't work out, it's because either you got in at a bad time or you traded the wrong direction or you use bad money management. If you're wrong, you get out. Don't stay in a bad trade. Don't stay in a bad trade. Many thanks for watching. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.